Hello everyone and welcome to Moementum channel. In this video, we wanted to talk about some practical tips for you starting to invest in the stock market and how you can make sure to get the best returns and actually make sure that you are investing safely for your future. These tips hopefully provide you a step-by-step guide how you can approach stock market investing and really having the right mindset when it comes to planning for your future. Because at the end of the day, keep in mind, having the right mindset and attitude is really the key determining factor here. So the first tip, practical steps for anybody, in my opinion, is knowing your why. Why is it that you want to invest in the stock market? Why is it that you want to save money and have it invested? Knowing your why is so crucial because it really acts as a catalyst and really as that force in pushing you to make those sacrifices. Whatever that why is, knowing about it and being clear upfront is so crucial. Whether it is to save for buying your dream home, or perhaps buying your dream car, or perhaps you don't want to work that 9-to-5 job for the rest of your life and rather want to retire early, or perhaps saving money and investing it so that you can then afford to go on your dream vacation, or have enough money to fund the education for your kids or yourself, may perhaps pursue whatever you're passionate about and go and get trained and educated on that. Whatever that why is, knowing about it upfront and being clear about it and really being determined to make that happen is so crucial. So that's step number one. Once you know your why and have that to push you to work hard, the second step, in my opinion, is planning for it. And part of that is really knowing where you stand, knowing what your current status is, what are your current expenses, and what are your sources of income. Budgeting is really an important technique that comes to discussion here. We've had another video made on this channel that talks about the Mo budgeting technique. If you haven't checked that out already, I'll leave a link in the description of the video, and also you will see probably a card on the video somewhere here. But essentially, it is about keeping track of your expenses over the past 1 month or perhaps 1 to 3 months, and really helping you understand where your sources of income are, how are you earning your income, whether it's through your day job or whether perhaps you have a side hustle that allows you to make more income. And aside from that, what are those channels or areas where you're actually spending your money? Where is your hard-earned money being spent on? And the gap between your income and your expenses is really whatever leftover money you're gonna have that allows you to now hopefully be able to save it, and more importantly, perhaps actually invest it. Because leaving your money in the bank accounts and typical savings accounts are not gonna really yield a high return. For the most part, a lot of the banks these days are yielding a very low percentage of interest, barely sometimes even reaching 1%, which if you think about it, the inflation rate sometimes actually is higher than that, the interest rate that the banks are paying you. So in the long term, you're not actually gaining anything, and if anything, you're actually losing it. So it's so important that you are able to have enough funds left over to be able to invest it potentially in the stock market. And that's the focus of this video, where on average returns 5% over and above any savings account, even after taking into account the inflation rates. So that's something for you to be mindful of. Before you get into the next step, I think it's also important for you to be aware of what are your time horizon. What is your risk tolerance? Are you investing for something that probably you're going to need the money in the next 6 months? Are you going to need that money that you're going to invest in the next 1 year, 3 years, 5 years? So what is your investing time horizon going to be like? And depending on that, it really is going to impact the level of risk perhaps that you should be taking, on top of course your comfort level when it comes to risk tolerance. And risk tolerance essentially talks about how much you're willing to lose. And for example, if you put your money in the stock market, depending on your risk tolerance, if you invest in more riskier stocks, while there might be higher chances for higher returns, there's also higher volatility with those stocks, and the chances are that you might actually lose money in the short run, at least. So are you comfortable putting in, let's say, $5,000 invested in the stock market and seeing the value of your investment go down to 4,000 or 3,000. How are you going to react? If your immediate reaction is going to be you're going to panic and you want to sell everything, then that level of investment is not probably the right level of risk tolerance for you. Whereas if you are comfortable with that, and if your decision at that time would be, you know what, it's fine, I understand that the stock market has ups and downs, I'm going to actually continue to start investing more, as long as, of course, the fundamental for the company or the stock that you are going to put your money in is still solid, then probably your risk tolerance is higher. And there are a lot of questionnaires out there, different tools that allow you, by answering several questions, you can identify what is your comfort level and what is your risk tolerance. So make sure you do that before you start investing in any stocks. And of course, know about your comfort level of time horizon. And that's something that you probably are going to address at the planning stage. Think about your time horizon. What is that? And what are you going to need the money? Is it for that dream vacation? It's going to come up maybe in the next year. Then maybe you need to start investing in perhaps some lower level risk items such as bonds. But if it's longer term, for many investors, especially if you're younger, I would probably say, as long as you have the right mindset and right level of tolerance, it is probably wise if you start investing in more aggressive, perhaps stocks, as long as I mentioned, I repeat this point, your comfort level is your higher level of comfort for risks, and you're not going to need the money right away. You've already built this emergency fund, and if the value of your stocks go down, you're not going to panic, and rather you're going to stay true to your course and continue to invest in the stock market. The third step after you've gone through, knowing your why and planning is, in my opinion, making sure that you have set aside an emergency fund. It is so crucial because before you start investing in your hard-earned money in the stock market, which can be volatile and risky, it's important that you have set aside enough money for your immediate needs. Emergency fund usually takes into account calculating how much money you need to survive, let's say how much money you're spending every month, and then making sure that you set aside roughly 3 to 6 months of your that amount as an emergency fund. You could probably try to leave it in a savings account that hopefully earns the highest amount of interest possible. We know that, as we discussed, it's not going to be as high, but at least if it's something closer to perhaps to 1 to 2%, it hopefully matches the inflation rate, so you're not at least losing money in it, if not gaining anything on it. But it really allows you to rest assured. And if anything happens, God forbid, if you lose your job or suddenly there's that unexpected bill that comes your way, you have the funds, so you don't have to tap into borrowing money at much higher interest rates. Having an emergency fund is really the right decision and right step to have. The next step is, especially if you're new to the stock market, I would say start small no matter what, but start perhaps with less risky options. So what I mean by that is, first and foremost, you don't have to necessarily get started with having saved a large sum of money. You can even start nowadays with much smaller funds, even sometimes get started with $2, $5. There are a ton of brokerage firms out there, especially the ones that are robo-advisors. They allow you to open an account. For example, even accounts that are tax advantage accounts, such as tax-free savings account here in Canada, that if you earn anything on it, you don't even have to worry about paying taxes on it. It's totally tax-free. But you can actually invest your money in that. It doesn't mean that you have to just leave your money in a normal savings account, although the name says tax-free savings account. It actually can be used as an investment tool. So one of those tools that out there, and there are many of them out there, so be sure to do your own due diligence. But the one that I got started investing with is called Wealthsimple Invest. It is a robo-advisor, and it is perfect for a lot of investors out there that maybe do not have the time or not really as savvy when it comes to stock market investing, and they want to invest passively. So you can open an account such as a tax-free savings account and start investing as little as $2, $5. And gradually over time, if you have any leftover, let's say if you work an extra shift, or just now you wanted to go and buy a Starbucks coffee and decided, you know what, maybe rather than buying that Starbucks coffee, I want to make a coffee at home and put that $5 into my tax-free savings account through Wealthsimple Invest, and in fact save it for my future. And you're going to see how over time you're going to be able to build that habit. It's so important for you to get into that habit and momentum of investing and gradually funding account. And as you see your balance of your account grows, you're going to, guess what, you're actually going to be a lot more excited about it. This is exactly how I started when I started investing in the stock market. I started with Wealthsimple Invest. started with a small sum of money. Gradually, I got so excited about it, and you can see how you're over time growing your investments and you add more funds to it and more funds to it. And I remember at one point in time, I had closer to 50,000 plus invested just in the span of perhaps a few years. And it was so exciting for me because when you start from zero and getting there in just a matter of span of a few years, I found it very inspiring, and it just opens up a lot of doors for you, and you get to see what is possible. So my advice is really getting started with that. But in the beginning, maybe don't necessarily take the highest risk. It's so important for you to get familiar and really learn the lessons and see even in practice what is your comfort level. You might think that, oh, your risk tolerance is very high and you're not going to panic when the stock market drops, but in reality, it might be a different story. And in fact, I went through that exercise myself, this whole process. And I remember in the beginning when the value of my stocks dropped, I remember I had invested, let's say, $500 and the value dropped to 300 and 400 or something like that. I was really panicking. I wanted to close my accounts, but I'm glad I didn't. And I got more educated on that. And I realized that when the value of the stock market drops, especially if you're investing in passive stocks, such as index funds, and the difference for index funds are, rather than picking a specific stocks, you're actually spreading your risks and by diversifying. And through index funds, you're owning a small piece of multiple stocks out there. So say if you are invested in a fund such as VTI, the Vanguard Total Index, here you are owning a small piece of several thousand different stocks in the stock market in the US, for example. So essentially, by having this diversification, you're lowering your risk and allowing for less volatility in your portfolio. The next tip that I'm going to share with you is the importance of getting educated. It's so important. There are multitude resources out there that you can get educated for free, from YouTube, from different books that you can borrow from library. There's so many contents. For example, here on Moementum channel, we try to post videos several times a week talking about different concepts in stock market investing, providing some tips and how you can analyze the stock and how you go about reading to different numbers in their income statements, balance sheets, and whatnot. And we try to really share it in as simple as language as possible, and also allow our visitors to really post comments and ask us questions and really try to address that. So if you haven't done that already, I do encourage you to subscribe to Moementum channel, but also don't limit yourself. There are a ton of resources out there that you can get educated on. I will leave a number of websites in the description of the video that you can get free education for the most part about different stocks, analyzing different stocks, and different pieces of information around the stock market analysis that will share with you things such as Simply Wall Street, 𝗖𝐋𝐈𝖖, 𝗖𝐋𝐈𝖖𝐊 Finance, Morningstar, and many more that we're going to add the links to the description of the video. So be sure to check that out. And my last tip, really, to wrap it up, is really being able to take that time to reflect, course correct, and get inspired. It's so important that along the way you learn from your lessons and really assess how you went about this process, what you learned from it, reflect on it, and really take that to your advantage and course correct. If you perhaps made some risky moves along the way and lost money, well, that's not desirable, but at least you want to make sure that you reflect on it and use that as an opportunity for you to learn from that. So hopefully you're not going to repeat that mistake again. Or if you did some decisions that are help make you money and there's a really scientific reason perhaps around it, and really it was a methodical way of how you did that, learn from that or reflect on it. But also make sure you get inspired along the way. Sometimes it can feel lonely along the way. You might feel like, oh, you know what, you're making a lot of sacrifices. Perhaps you wanted to go out to eat out in a restaurant, maybe several times in a week, but now you are making that sacrifice and instead you're saving that money. So it's important that you connect with like-minded people that have the right attitude and know about their own why. By knowing about their why and really sharing your experiences, I think you're going to get a lot more excited, inspired, and really stay true to your journey essentially, and really working hard towards achieving your goals. I hope that this video hopefully served that purpose as well and gave you that inspiration and desire to know why you want to get started investing in the stock market, or when you want to continue this journey on the stock market. If you haven't done that already, please be sure actually to give this video a thumbs up and share it with someone who might benefit from this video as well. I try to make this video as simple as possible, and hopefully it gives that level of momentum and inspiration to many of young investors out there, as well as those who are already on their investing journey and wanted to connect with like-minded people. By the way, do leave me a comment on this video and let me know what are your thoughts and tips when it comes to investing in the stock market. Are you a new investor, or have you been investing in the stock market for years? Is there any lessons that you've learned so far that you want to share with the rest of us? Or is there any question that you might have as you're getting started in investing in the stock market? I would love to hear from you. So be sure to leave a comment down below. And of course, if you haven't subscribed to our channel, please be sure to do so. Here on Moementum, we post weekly videos about stock market investing, finances, and financial freedom. With that being said, thank you so much guys for watching. Have a lovely day, and I hope to see you next time.